Hello, and welcome to an all-new edition of What Are Your Thoughts? I'm here with Michael Batnick, as always. Michael has no idea what I'm going to ask him about, and I don't know what he's going to ask me. Stick around. Let's see what's going on. Mike, I'm going to start with, I think you probably figured I would, the return of Bitcoin. Bitcoin's up like $8,000 since the beginning of 2019, or 250%. It's around 13 or 14,000 right now.
11.6.
Today's a big drop. But regardless, it is a hot topic once again because people have seen an incredible run. My question to you is: do people? This thing will not die. They can't kill it. So, do skeptics like yourself have to? I don't want to say take it more seriously, but maybe give it more respect. And in that vein, like, do you have to entertain questions about it now, even if like you're not a believer or you don't care about it? Like, isn't that a fact?
Hold on, I think skeptic is too strong a word.
Okay.
What
are you?
I am a know nothing.
You're an agnostic?
I don't know. I am a know nothing.
No, I understand that, but there are things that you know a lot about that relate to it, like performance of investment psychology. So if people ask you questions about Bitcoin, like, you kind of have to entertain that. You can't just be like, yeah, whatever.
No. My answer is I don't know anything about it. I don't have opinions. But it is on my screen at all times because it's amazing to watch.
Yeah.
So January it was at under 4,000, and then yesterday it hit a high of 14. So I can't stop watching it. Why don't I own any? Like, I don't know anything about it. Why don't I own Chipotle? Or forget about Chipotle. That's a bad example. But I know nothing about it. There's no reason for me to.
You know a lot about Chipotle.
So actually, yesterday I did like sort of feel stupid for not owning it, because that's like what all of these. Anytime you see something go up 20% a day, you feel like an idiot for not owning it. You're like, oh man, I should have bought it 3,000. But I have to remind myself, I don't know anything about it. Nothing.
So I have a confession to make. I have begun logging into my Coinbase account frequently. Once again.
Did you ever sell?
No. I don't know. I didn't sell. I don't know how to. So.
But also, yeah, but you don't own a material amount, so it doesn't matter.
I have some in Coinbase, and then I have some on like one of those drives that I bought on Amazon. I don't know if it works or if I erased it or whatever. I never checked it, but now I'm like logging in to see, and I have like Ethereum, and maybe that'll start going up. I don't know if they're like gold and silver, but I'm embarrassed. I'm looking now. Maybe that was the time to sell when I started checking all weekend. I don't know. All right, go ahead.
All right, let's stick with this. The recent rally in gold. So it is at a 5-year high, 6-year high?
Yeah.
Is this for real? Is this breakout for real? And what's causing this? If you had to guess.
Do you think the Bitcoin and gold simultaneous rallies this year are related to the way the president is screaming at the Fed?
No.
And no? You think that one thing has nothing to do with the other?
Nope.
So is the Bitcoin rally the lead up to Facebook's big Libra announcement? I feel like that could play into it. I don't know. Gold, I feel like gold and the Fed are a single story. And so when the Fed punted in December and totally changed course on the rhetoric, and now this year we're pricing at 100% chance of a rate cut, I just feel like that's a thing that money managers instinctively do, is buy gold. And gold happened to have been in a downtrend for so long that it wasn't hard for it to break out of that downtrend.
But gold was doing terribly with rates at zero for years. So why would going back to zero all of a sudden help it?
Well, because the whole time that rates were at zero, the rhetoric was they're about to not be. And then that turned out to be true. We had tons of rate hikes. So now it's the other way. Now it's like we might have seen the peak of interest rates for this cycle. The other thing is that the dollar looks like it's laying down on support for the first time in a while. The dollar's been really strong since Trump came in. And if that dynamic changes, that's also obviously the way gold goes up.
So is this do you think it's going to stick?
In conclusion, buy as much gold as you can. No, I think it could, because when these types of trends get started and they have this much momentum behind them, the knee-jerk reaction from everyone is to be like, yeah, fade that.
Fade it, yeah.
And then those people, if they're actually doing the fade and not just saying it on Twitter.
Does anybody actually do the fade? It's just.
If they did, well, the people that talk about it.
What does fade it mean? What, short it?
Yeah. Well, it's a commodity, so yeah.
Yeah,
sell futures. But the people that talk about it probably don't do the fade. But there are a lot of people that do it, especially macro funds And you could even see people that caught this rally and now they want to trade the other way. They want to make money on both sides. So, but then those people end up having to cover later because, again, I think when a trend like this gets rolling, it's not a quick thing. It takes time for that to build. So I would not be betting against it. But I don't speculate in gold. I don't think I know anything about that.
Yeah, you're only a Bitcoin speculator.
I only speculate in digital assets. In the same vein, I wanted to ask you about this idea. So you hear this thing from bottoms-up stock pickers a lot and from old school value investors and even growth investors, actually, where they say, we focus on buying great businesses. We tune out all the noise. We don't worry about what the economy is going to do. If we buy a great business, we'll be fine in the long run. But I was thinking, like, how can you really do that when what happens from the top down so radically alters the playing field for these quote-unquote great businesses? And, you know, I did this post when everything that counts can't be counted. And it's about, like, all right, it's a great business now, but if you flood the world with money for 10 years, anyone can come and compete with you. Is it still a great business if the macro changes? What do you think about that?
Well, like how interest rates affect a business is basically what you're saying?
So Warren Buffett was able to focus on buying great businesses, and he did a lot of that in the pre-Alan Greenspan Fed era, when the Fed wasn't as interventionist to save the stock market as I think we all agree it's become. So it's a different environment now. Now the cost of money, where interest rates are, the cost of debt, the cost of equity, those things could radically alter what was a good business and turn it into a bad business. And I don't
well,
see
some businesses are less susceptible to that sort of vulnerability
Is that
than
still
others.
true?
Like, I mean, consumer staples, for instance, like Charm.
They used to say health insurance wasn't vulnerable to the macro. People
Okay,
always pay for it.
so what?
What if Amazon decides $79 a month you have health insurance for somebody that's under the age of 30? What if they just do that? Then you have like, oh, United Health, it's a good business. Here's goodbye.
So I think what you're trying to say is stock picking is hard.
I'm trying to say I don't know that it's such a great idea to be one of these people that's like, tune out the, you know, like Peter Lynch said, if you spent 13 minutes thinking about the economy, you wasted 10 minutes.
I think that's probably, yeah, but that's probably, I think he's talking about like making decisions based on macroeconomic forecasts. I think if you are picking stocks, you have to focus on the business. What else are you going to focus on?
I don't know. I feel like you can focus on the business all you want, but the macro is going to have a bigger impact than maybe you think.
Yeah, it's
and
hard.
a lot of your calculations could be wrong.
Of course.
All right. Anyway, what do you got?
All right, student loan debt. I want to ask,
I'm against it.
wait, hold on. I want to ask you a question. Forget about whether they should or they shouldn't.
Okay.
Is this idea totally dead on arrival? Or is there some room for maybe...
Is which idea? Wiping it out?
Yeah.
You know what? I think it's not dead on arrival, and I think some version of it will happen if a Democrat manages to win the White House, which is not a slam dunk. I know the polls say it is, but it's not. I do think even Biden is going to get pushed left on this idea. I think the only question is, to what extent do we start offering relief? Is it full relief? Is it partial? And who's going to end up paying for it? I think those are the real questions. I really do think because of there are 73 million millennials alive today, and that generation is disproportionately hit with the student loan debt epidemic. Now, there are people that say it's not an economic catastrophe. The number has grown with the amount of people who have gotten college educations, and it should have. There are people who say, yes, the average balance is higher, but look at how much more money these people make when they graduate. On an individual level, that's not true, but on a broader level, it is true. So I think it's probably somewhere in between. I think you're asking me what my next topic was going to be, so let's just get to it. Which do you think would be more destructive for the stock market? Like if a client says to you, which should I worry more about, Warren or Sanders? Here are the stakes. Elizabeth Warren wants to take a 2% tax from the net worth of the top 75,000 households in America. So any household that has more than 50 million in assets.
So you're saying if this were to actually happen, because that's
not
going to happen.
If Elizabeth Warren wins and there's enough momentum for this that she can do some version, her plan rests on the idea of literally redistributing wealth without remorse and just saying, we're going to appraise all your assets, and if you're over 50 million in assets, we're going to take 2%, and we're going to redirect that into helping people. So there's that. or Bernie Sanders, who wants to take 50 basis points from every stock buy and sell, and a basis point from every bond transaction or whatever. Which one do you think would be worse for the stock market?
I don't know. Why would the first one directly impact the stock market?
Because
I think
what
that could
percentage of the stock market do you think the households that have more than 50 million in assets, what percentage of the stock market do they own?
98.
Like a lot of the stock market. These are executives from big companies that own a ton of stock.
Okay, but you could also make the argument that if it gets redistributed, it'll be spent back into the economy. So maybe that'll be good for stocks.
I don't know. How is it redistributed? Who knows? Government programs?
I mean, I think
way back
that
into
is
the economy?
dead on arrival because these people are going to have their assets moved every which way.
Yeah, they'll be in the Caymans.
Yeah, they're gone.
Like, if you tell people we're confiscating assets held in the U.S., guess what they're going to do?
Okay, yeah, right. So
you think the Sanders plan, where they're clipping an extra commission essentially? Somebody said to me over the weekend, actually. Somebody said, "Do you remember when it used to cost 1 or 2% to buy a stock? So 50 basis points isn't going to kill the market."
Well, I was going to say,
we already lived through
why
that.
Why is encouraging less trading bad for the stock market?
They're not trying to encourage less trading. They're trying to take a coupon basically
I understand,
from the investor class.
That would lead to less trading, you would think, perhaps a little bit. I don't think that would affect the stock market either.
Did people trade less when it cost a 1% commission to buy or sell a stock?
Absolutely.
They did?
I can't prove it.
Or did we just have less HFT?
I was about to say there was probably none of that.
Right. So my take is it's a bad idea because the signature achievement of the post-millennial capital market structure is that we made it free to invest. Like essentially you could transact for free. You might have a high-frequency person on the other side of a trade or whatever. You don't really see it. You don't feel it. But now you're going to reverse that. And then what do the ETFs do? Like
How does that even get implemented?
And then nobody said anything. Is this going to apply for IRAs and 401ks, or is this just going to be in brokerage accounts that are taxable? I don't know the answer. I don't even know if Bernie thinks about the difference between an IRA and he keeps saying Wall Street fat cats, like the nurses and firefighters who have money in pension funds.
Maybe
fat cats.
Maybe it's like companies that are trading more than 1,000 times a day get taxed or something like that. Like your IRAs are safe and.
So you think that would be worse, though, than Warren's plan of wealth tax?
I don't know that either of them would necessarily affect the stock market directly.
Okay. I think both would. I'm not sure how. You're up.
Okay. This is a dumb question, but I'm going to ask it anyway. This is really bad. I'm not even sure what question I'm going to be asking, but Trump spoke about Draghi replacing Powell.
Yeah. Why? Because one's easier than the other?
I don't know.
Yeah, it's pretty dumb.
That's a bad question. I'm sorry.
I do think he could force Powell out. I just think it would take a long time, and Powell seems to want to stick to his guns.
That would affect the stock market.
I think so.
Yeah.
But you asked me about what gold is moving on. In the 1960s, LBJ went head to head with the Fed chief, and I think he threw him up against the wall at Camp David.
The Times had a great article like a few years ago about that.
Yeah, like this is precedented. Is that a word?
Yeah.
It's precedented. It's happened. I don't think if there was Twitter when LBJ was doing this, would he be tweeting shit at the Federal Reserve all day?
Yeah.
I don't know. Now what's interesting is if you get a rate cut in July, which in my view, there's no need for. It's not going to do anything. But if you get it as an insurance cut or whatever they're saying, does the market even like that? Because is it a sign that the Fed is basically now doing political work for the White House? I don't know. But I do think that will impact the market and maybe is the reason for people looking at gold as something that's out of the hands of the Fed, so to speak. Here's my last one. So the Wealth Management Awards are September 12th in New York City. I've been to this event. It's really nice. It's like black tie. It's a gala. Everyone's there. Did you happen to see that I was nominated as CEO of the year? This is not a humble brag. I'm getting to my question, but did you happen to see that?
I did. We haven't talked about it.
We haven't talked about it. This is going to be even stupider than your stupid question. I'm a little worried that this could be like a Madden curse or like being on a magazine cover or something. Like
this is like the Peyton Hillis Madden
I don't
cover.
think I'm going to win this, by the way, because Ron Carson is in this and Joe Duran, and these guys have crushed it all year. Like I don't really think that I'm seriously going to win, but is it like good to want to win? Or is it like...
Weird question.
Yeah.
Dumber than mine. Is it
don't
weird
know.
to want to win?
No, because like you know how like people that win like a big award like this in mutual fund management, then they underperform for the next 10 years. People that appear like on Sports
as an
Illustrated cover
aside,
get injured.
is it weird that people say they're humbled when they win an award? I don't even understand the origin of that. I think it's something that's like been
They're
done.
misusing the English language. It makes no sense at all. They're saying like I'm humbled by the universe, by all the attention that I'm getting for what I've accomplished. But it's stupid. I'm not going to say that if I win. I don't think I'm going to win. Anyway, what do you got? What do you got? Anything else?
I do.
That's it?
No, I have one more thing.
Okay, go.
So there was some chatter about hedge funds for retail investors.
Oh, those will be good.
No, really, what do you think?
What do you mean hedge funds for retail
Like,
investors? Like
should the accredited investor thing go away? Are hedge funds for retail investors such a bad idea? Any worse than a lot of the bad ideas that are already legally available?
Well, let me ask you. Let me answer your question by asking you this question. If you're a really good hedge fund, do you want retail money? Do you want to deal with 50,000 investors who are putting in $50,000 each?
No, but that's not the question.
Well, it is, because if you're not going to get the very best hedge funds, and I don't even know how you say who is, because that's all based on backward-looking performance, who are you getting?
Well, how about this? Flip that. Maybe some newer hedge funds can't raise money because they don't have a track record, and
that is
some of the
true.
new ones have done really well, and maybe retail investors can benefit from that.
Yeah. So,
Like, do you think that the 3-time levered bear bank stocks are any less dangerous than what a hedge fund could be in somebody's portfolio?
no, that's true. I don't have. I guess I don't.
And
have,
does $1 million make you so much more sophisticated than somebody with
No.
$200,000?
No, and from what I've seen, and you could end up being way less sophisticated because the decisions you've had to make aren't important to you with a ton of money. So I'll answer this in two ways. The first is I have no problem with it. What's the difference anymore? They passed the Jobs Act. They're allowing individuals a much lower threshold before they can invest in venture capital stuff, which is probably riskier than hedge funds. Those are literally binary bets on companies. So you did that, and now you're going to say, so now. But my second answer is, does an individual investor who's not accredited need to hedge anything?
Yeah,
They don't
but
have enough money.
do they need a million things that are available?
No, understood. I'm not saying that should be the reason not to do it. I'm just saying if somebody's like, I have $100,000 invested in the market, do I need a hedge fund? It's now available to me. Look how special I am. No. What do you do with it? Like, just invest less. If you're trying to protect money, don't put it at risk. And the money that you do want to grow, you got to put it at risk. A hedge fund, what is that? So you can earn 2% on your money? Like, that's the reality of that asset class. And it's not because they're not good investors.
Well, it's the reality of over the last 10 years.
Well, it's not because they're not good investors. It's because to protect yourself from the risk of one, you have to own a bunch. And if you have to own a bunch, they're all doing all different things. And then the fees are insane. And so, and then you're paying a middleman. Maybe you're paying me a fee to find you hedge funds. If you're going to do that, you're not going to win. You're going to lose. So should it be allowed? Yeah.
My point is, I guess
do it.
there's a lot of ways that you could lose in the stock market. Like and you could win from if you get lucky into a good hedge fund.
Do you agree, though, that, yeah, of course. And by the way, some of the best hedge funds in history started out as like mom and pop, like friends of friends of friends. There was a really smart kid in the family.
Isn't that how they all start? Like all of the biggest winners?
Well, you had, in the last 10 years, you had this new thing where Goldman Sachs would do cap intro.
But that doesn't exist anymore.
I don't know.
Tiny hedge funds that are getting off the ground with
No, not
$10 million
tiny.
bucks.
Bloomberg
had an article. You need $250 to start a hedge fund now. It's a lot.
But like Chelsea Clinton's husband is like, I went to Harvard or whatever. I'm going to start a hedge fund. And Lloyd Blankfein gets 500 of the biggest institutions in a room to listen to this kid. And he ends up pitching Greek bonds, which he was like 8 years too early. But that will always exist. Like somebody who's like got connections. It's the guy that can't raise any money because he has no connections and he doesn't know what he's doing and he doesn't have a prime broker. Should he have the right to go to his friends and family and say, I know you're not accredited,
yes,
but take a bet on me? I'm fine with it.
Absolutely.
Do it. By all means, do it. All right. What are your thoughts on these topics? We'd love to hear your feedback. Go ahead and let us know what you think. We always get a kick out of your responses on these topics. Go ahead and smash that like button. Hit us with a subscribe as well if you haven't already. And we will be with you soon.